How critics argued that the supermarkets were engaging in inflationary profiteering and called for an inquiry to improve transparency and competition in the market. The big supermarket chains in Australia have been accused of profiting from the pandemic and the cost of living crisis by increasing their margins on food sales. Coles and Woolworths have reported higher profits and margins in their latest financial results, despite facing higher costs from suppliers and other expenses. Critics say this shows they are charging shoppers more than enough to cover their costs and are taking advantage of inflation to boost their profits. Some analysts and consumer advocates have called for an inquiry into the supermarket sector, which is dominated by Coles and Woolworths, who together hold about 70% of the grocery market. They argue that the supermarkets have too much power over prices and suppliers, and that there is not enough transparency or competition in the market. They say an inquiry could help lower prices for consumers and ensure fairer outcomes for farmers and other producers. One of the critics is George Baburas, the executive director and head of research at K2 Asset Management,